What is going on, everybody, and welcome to another weekly update. And what I like to do in this video is provide you some upcoming earnings, events, some technicals to help you get prepared for the week ahead. If that sounds like something you're interested in, consider subscribing as I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market. Now, very pivotal week. This is something we've been talking about. Uh, there's a lot of different things that happen. There's a lot of different data that occurs. But what matters is there's specific events that I feel have a lot of weight, and you have to understand where my perspective comes from. Is a lot of these things, their weight really slowly depends on what is going on with the dynamic or the settlement of the market. Given that the settlement of the market can change on a dime, considering what current events are going on, and the current market that we've been dealing with for the past couple months has had a lot of different events going on. So there has been a lot of volatility in this market, if you haven't noticed already. But one thing I said coming into this weekend, what was really important is that we needed to stay above that 36.83, and we didn't. We gapped down on Friday, and we sold off pretty heavy. We even had a little bit of a gap down overnight in the futures. And now we're holding roughly right around that 35, 85 right now. Uh, Coming into this week, again, a very, very pivotal week. Why, you may ask? Well, there's certain things that happen that I've been talking about that have a lot of weight. One being we have a core CPI report on Wednesday at 8:30 a.m. Eastern Standard Time. We have the FOMC minutes, which, to be honest, at this point, may not have a lot of insight. People are already well aware. The Fed have already made it well clear what their intention is, and that is solely to battle inflation. They don't care about what's going on outside of the U.S. Their sole job is to protect the U.S. And right now, the U.S. is on the verge of some major, major trouble. So, especially if inflation can't be put back under wraps, and Wednesday will help guide us there. Now, what's important about the core here is you have to understand we came in at 9.1 was is currently the peak. We dialed back to 8.5 and we barely dropped down to 8.3. Now, there's a lot of other things to consider here. Since we came in at 8.3, we haven't really came or dropped down that much on inflation. Inflation's rotated into rentals and services. And so, and being said, you just had two more hurricanes come in. Commodities were way down, which was good, but we had kind of that seasonal gap where commodities weren't as expensive. But have to understand that we're rolling back into the winter months in which commodities are naturally have a bump, and you're going to get more and see more of that here in the next Q4 here. Just understanding that Q3 would only get at the tail end of that, and we're starting to see, even myself personally, is starting to see gas slowly creep back up. Now, with that being said, um, we have to see what the next thing could potentially be driving this, because even though some inflation is coming down, it's spiking huge in other areas, aka rentals. Yes, we got dialed back. Understand that food and energy came down. Yeah, you saved an extra $50 on food and energy because it dialed back, but you're paying hundreds, if not thousands, more on rentals. So inflation hasn't gone down, and that is the concern going into Wednesday. Is do we hover around 8.5, or do we go and make a new top? And that is what's concerning. If we hover around the same area around that 8.5 or break a new all-time high on this current trend, we are in deep trouble, and the Fed will consider a 100-point basis move. I don't believe they're going to come anything lower than the 75-point basis move nonetheless. We still got a couple more weeks before monetary policy, but you have to understand now we do have earnings. We get to start earnings as well this week. So you have JPM, Bank of America, TSM, or some of the bigger ones I'm watching. Again, I don't list every single earnings on here. I only list earnings that I am really watching in play. And again, as far as watch list, these are the ones since the way the whole year has been. I've kind of just kept these to kind of keep an eye on all the different industries. I don't have healthcare on here because I don't typically pay healthcare because healthcare is extremely volatile on its own. So nonetheless, I keep the general index, Tesla for tech, and then BA for value, and then obviously banks. I put JPM on there. But thing to consider here is SPX has 136 136 point move is essentially priced in this week. It's dialed up way up from roughly around 70. The general market, when there's not a lot of volatility, is roughly around 70. So that shows you how far the SPX is pricing in what's about ready to happen this week. Tesla is always pretty volatile, especially in a market when rates are skyrocketing. That just means if they continue to skyrocket, that your tech is going to get battered and really bad. And tech try to have some sort of a pre-earnings run, something I've been talking about up to this point. A lot of these different. The best window was the last 2 weeks for anything to pump, and we had some little bit of a pump and a little bit of sell off. It was a really nasty, choppy past couple of weeks. So there hasn't really been any pump. So being considered, since there's been no pre-earnings pump, what's going to happen is if that core is really bad, I think we're going to continue to sell. But at the end of it, potentially after getting some bigger tech, we have to understand that I believe Tesla and Netflix will be next week, and then you're going to have big tech like Apple, Google, Amazon's. Right, they're going to report after the fact, the following week after that. So the next 2 to 3 weeks are going to be very pivotal because that is going to essentially add fuel to either side depending on how good or how bad these earnings are. Now, again, the core CPI is going to matter because if it doesn't drop below 8, that's going to be worrisome. I don't care if it comes in at 8.1. It's not dropping enough. And the Feds told us that last week. You have to keep that in mind, is that if it doesn't drop quicker or it doesn't drop enough, the Fed is not going to dial back. And so, again, what is very concerning, we're still getting a lot of bad data. I don't like going off of any of the data because it is very misleading in a lot of different cases, and people are assuming that if it goes one way, that obviously the Fed's going to dial back. There's going to be quantitative easing. The Fed cannot do any of that. If the Fed does anything dramatic, you have to understand just a little dial back from the Fed is very dramatic at this point, because if they dial back or stop, inflation could keep going. And if they let off the gas and it gets even more out of control, then we're in a big, we're going to have a huge problem. And so, and to the point to where we're not going to be able to catch inflation. And then we could end up, in some, extremely crazy cases like Turkey, for instance, right? I believe their inflation's up like near 70-80%, which is absolutely absurd. So, and the fact that you can't even pay for basic necessities because things are just so sky high that your whole paycheck goes to energy or to food. And if you can't have one or the other, you're going to have a huge problem. And this is what we're seeing is people are starting to liquidate assets to try to cover. We have to understand that all these people trying to liquidate their houses at one time puts a surplus of housing units out there, and then it's so expensive that people don't want to buy houses. So that is a problem because it's you can't afford what you could, just last year before these rate hikes started going out of control. You were able to buy a very big house for very little. Now you can make a lot and you can barely maybe afford a 1,200 square foot place, if even that at this point. And considering if we keep raising rates, which are what is going to happen, because if the core does not come lower than an 8, the Fed are going to have to continue to hammer at least at 75. And if you start talking about hitting over 9.1, the Fed uh, will hit a 100-point basis move, and they haven't taken that off the table. And people don't realize that. And this hopium thing that's going on, that's fine and great, but you have to understand we haven't hit peak. Again, my opinion is peak is going to hit around uh, towards the back half of winter. So February or March, you'll start seeing a dial back, I think, on inflation, and maybe that's where we'll see a dial back on monetary policy. But until then, I think you're going to see the next two monetary policies, November and December, are going to be at least 75, if not more. Again, highly depending on core. Nothing else, none of the other data or anything else matters. It really just depends on what the FOMC. And you have to understand too that on Friday we sold off heavily because the jobs market, again, which is very misleading, is telling people that the job market's strong. The Fed can just keep coming in and hammering rates. And so those are things you have to keep in mind and be very, very careful of. Again, so extremely volatile week. Now let's dive into it. Again, we got strong jobs report, not good because Fed is going to hammer rates, and we just sold off heavily back down to this level. 36 is what we really need to watch. If this breaks here, we're going to go for at least another 100-point move, 200-point move from that point. And something I've been saying up to this point, 43% correction in a general recession. Higher or lower, but we've only been to a 25% correction on this year. Again, if the market's going to, at this point, you're in a panic mode, right? So all these pumps are have been artificially inserted into the market with media. You have to understand that the Bank of England's move to quantitative ease is brought this false hopium into the market. This is why we've been getting these pumps. Because the Fed is in a state of panic. You have to understand they're in a state of panic when they're reaching out to the media, or Bank of England is reaching out to the media when they can't afford to artificially inflate their financial system, because their financial system is collapsed, right? Until that comes out to the general public or announced that it's been is officially collapsed. This thing could really get crazy gas to the downside if, again, Europe folds. If their financial system folds, which is on the verge, and they almost did, you have to understand that if they didn't come out and make a statement on that Wednesday, we couldn't have been in a lot of worse, had a lot more pain than what we've had so far. We've had a lot of pain, and I'm saying the pain, we still have a lot more pain. And that's what I've been trying to reiterate about a lot of these different things. So we have to see if we can hold that 36. We break that. We've been holding thus far, but you're going for a double bottom here. Again, if the market continues to hover around here, it's only a matter of time before this breaks down even further. So that's what you need to understand. But again, I'm really watching this leg. I want a really solid leg down from here. If a really solid leg down comes from here, I think at that point I want to start DCAing down here after this breaks. And we haven't flushed when we've attempted to break that, because we broke it here, but there were buyers right there. So my question is are the buyers still going to be there? Because if they're not, this thing is going to flush heavy. I mean, heavy from this point. But again, you have to also understand when you look at the weekly, and this is why I talk about these levels, because I said we needed to hold above that 36.98. And when it did break, people were like, oh, it's a reversal. And I was like, well, you have to wait to the end of the week. And look what happened. You straight wick. This is why these false breakouts, you have to be very careful and put stops in place and takes profit, because this kind of thing happens. You get one event and this thing wicks back right down to the danger zone. You had the break of the 36.87 here. A retest, now this thing could start really dropping, and we're talking like 3,200, if not more, from that point. And again, something I said, if we do a correction, its average is 43%. 43%, you're still looking roughly around the 27.37. That is a huge drop for right now. So just be mindful, it is possible, higher or lower. If these black swans continue to happen, this thing could really drop even more. But you also also have to realize that right in this thing with recession, you're going to get a lot of pops and drops, right? Because when you get such bad news in the market's going to sell, and then that good news, and then the one good news will pump. This is what happens in a bear market. When you get hopium, the market's going to pump. Hopium, pump. Hopium, pump. Hopium, pump, and then drop. And then realization. These are realization that hopium wasn't real. You're going to continue to get this until you get peak inflation. Monetary policy slows down and inflation stops. So you have to understand that that is not a quick transition. The market is not the economy. So the market will pump on hopium, but you have to realize when that event comes out and you realize that it isn't getting better, you're going to sell off again. So this is why you got to have risk management on the table, because when you have those reports that have weight, and it turns out that things aren't better, that the hopium isn't real, then you sell off. So nonetheless, we are a very pivotal week. I'm going to see if we're going to hold in between here, which I'm thinking it could be a strong possibility. Essentially play roughly between the 35 or the 35.77 to potentially the 37.67. We could be playing until we get that core. We could bounce here. We could not bounce here, or we can continue to chop around here till we hug this 50 EMA monthly until we realize what is going on with the core and what's going on with earnings. Again, earnings are very, very heavily weighted going into this quarter because we saw cracks on the last earnings. Now we're going to see start to see the real exposure on this Q3 earnings. Q4, I think, is going to be really nasty if the Q3 earnings are bad. And you have to realize that expectations looking forward, if your Apple's done this a couple times already, but if Tesla starts pulling guidance, some of these other big corporations, your Microsofts, and Amazon just pull full guidance and aren't going to give any guidance, that is a big concern. But you have to understand in the future when they do that and they come out and beat expectations on potentially Q1 or Q2, you're going to have a massive rally to the upside. But again, I'm talking short term here, what's happening in the next quarter. Q3, Q4 are going to get really nasty, in my opinion. And then from that point, we could see a potential pivot that will push us back up. And so again, very pivotal week on the SPX. Bitcoin, I still think this thing is going to break. It's going to retest this 18K mark by the end of the week. And then if not break this, my question is how low do we go from that point? Yes, it's been consolidating a lot, but right now, if things are bad, the general market's going to sell off pretty heavily. And then you have to realize it's going to break and this thing's going to flush down. Just have to see how many, but I'm again DCAing on whatever flush does come from that. Tesla finally broken, is selling off heavy at strong support here at the 22. We could still drop to the 200, but again, if it breaks 200, you have the 20 EMA roughly sitting around the 89 mark right now. So you're going to bounce off that. The question is, it's going to lead up to earnings. Are they going to do good on earnings, which they have beat delivery numbers and production numbers, but not towards expectation? Yes, they're continuing to dial back just because of the current market we're in. So you have to keep that in mind too. So I have to see how earnings does do there to potentially I'm starting to DCA into this thing slowly but surely. Because it still is one of the best companies and they're still producing, even though their numbers are coming down a little bit just because of the general market. You have to understand that they're still doing very, very well. This is why you find companies like this that you DCA in when you get these huge sell-offs, because they'll be the first ones to start rallying back. BA is again a second leg, just like the market. I think this thing is going to gap down, double retest the 114. Breaks that, I get a pretty heavy flush back down to the 100. So I want to watch that and see what's going on there. JPM again, double retesting the 104. Break that. I think we can see a pretty low $90 JPM if things get, especially with earnings coming up. If earnings do bad, which they did bad on the last earnings, there's been a lot of layoffs in the banks. You have to understand this. We aren't going to pivot when the banks are laying off as heavy as they are. Banks have a lot of weight in the market, and if they are doing bad, it's only going to be a reflection of what's about to come with the rest of the market. So again, I still think a $90 JPM is in the cards. GS did really well in their last earnings, so it's holding up a little bit better, but I still think you're going to retest the 180 or the 280, excuse me. And then if it potentially breaks, again, I think you see a big flush from that point, but we'll see what happens there. Bank of America, again, same thing. A lot of the banks look the same aside from GS because they did do well. But again, if it can break the 29, again, you're going to get some heavy flushing from that point. But I don't want to make this video too long. There's a lot of stuff, and I'm just putting this out on Monday, so I do apologize from that. I just finally got in from a personal event. Hopefully I can get this video out in enough time for you guys to make your moves and kind of understand what's about ready to happen. Again, extremely pivotal week this week. We have to watch core, we have to watch earnings, and bank earnings are going to be very pivotal on the next move. Again, my bias is to the downside until something changes. I don't think that's going to change till Q1 of next year. And again, you have to understand that Q1 earnings aren't going to be reported till Q2. So you still got many months ahead before we actually see some positive turnaround in this market. But until then, you guys take care, manage risk, and I'll see you guys on the field.